So today we're going to be talking about infinite banking. Hello everyone, infinite banking. The concept, right? This is not a product. This is a concept. Understanding infinite banking, what it's all about. There's two different types of people when it comes to our money. Either we are at work or our money is at work, right? I don't know if you ever heard that concept. Typically, either we are at work or our money is at work. Now, if I had to group us into a category, for the most part, we have always been at work when it comes to our money. Our money has always been at work. So we are always working. And so that means that we are the workers. While in this group over here, the money is at work. Right? So you have two types of people. Either you are at work or your money is at work. So for the most part, if I had to guess, for the most part, we call it the 40-40-40 plan, right? 40 hours a week for 40 years of our life, for 40% of our pay when it's all said and done. So we look at different options to have more money when we retire. We have all of these different plans that are designed by institutions or the government that puts our money into this housing component. So let's just call it a permanent residence. That money goes into a permanent residence, right? So you have this permanent residence that is going to either match your money, however that money is going to sit there. If you want to borrow from that money, then yes, you possibly could, but there's going to be penalties. There's going to be all types of restrictions that are attached to it because that money has to sit in that permanent residence in order for the concept of compounding. We're going to talk about compounding and how even Albert Einstein said that compounding is one of the 8 wonders of the world. So now that we know that we have this compounding going on, and how does this compound work for us? It disciplines us because we have our money sitting in this institution that we have no access to, and if we do, we're going to be penalized. And not only that, we're going to be taxed on that money when it's all said and done. So even though I'm looking at this bank statement and I'm saying, okay, I see I have X amount of dollars saved, and by the time I retire, it's going to be X amount of dollars. So that looks good in theory. However, when that time comes, now I'm going to be taxed roughly about 35% of that money is going back to the government again, right? And I couldn't touch it. So now let's talk about infinite banking and the benefits of what is infinite banking. It is an insurance policy that is infinite. Okay, infinite means it lasts forever. It never ends. It's like infinity. So it goes on and on and on and on and on. Now, how many of us even think infinite? And so that's one of the reasons why I'm passionate about this concept infinite. Now let's talk about the banking side. When you think about the traditional banking, this is not about a traditional bank. I'm not asking you to come together, hey, let's form a group and we're going to start a bank, right? No, not that. However, I do want to emphasize banking because once you understand this concept, you become the banker. You become the banker because what you're doing is you are accumulating, which is your money going to a permanent residence, just like you would do over in this group, but you're going to take that money and put it into a permanent residence called insurance. And now that money gives you access to it without penalties. It gives you access to it without it being reported to the IRS. It gives you access to it tax-free, and it gives you legacy for your family members. Now, is that not exciting to want to know more about this great concept that has been around for 200 years? We're talking 200 years, you guys. 200 years of a concept that is good enough for the Waltons, good enough for, and I don't know if you guys heard about, the Walmart where they took out policies on all the employees. It wasn't illegal, it was unethical because they didn't even know they had policies on them. Why? Because it benefits Walmart. whenever you take out a policy on that person, you become the bank. So if I take out a policy on my child, if I take out a policy on my spouse, if I take out a policy on my employee, then I am establishing banking systems that I can create generational and build wealth through this concept called infinite banking, right? So in this concept, infinite banking, understanding that I can establish a insurance policy on my life. Let's say I have health challenges and I can't get a policy, then no need to fret, because there's other ways to create an IB account, either through establishing a business entity with an employee, or either if you have children or not have children, there are still other ways that you can create an IB account, okay? So now how it works is this. I establish the policy first. I set my premium at a desire that I can, at a pace that I can pay. So let's say I'm starting off young, I love this concept, and I only have $50 to $100 to contribute into this account. So I'm going to be talking about how we can recycle our bill money shortly. But before I do that, I just want you to understand this is about what we put in is what we get out. So the more money I put in, the more I'm going to get out. So I have to redirect and change the mindset of how we've been programmed when it comes to money and the institutions. And we're going to talk about credit cards and how they work against us, because compounding is working, but it's working against us when we house our money in credit card institutions. There's nothing against the credit card institutions, but I'm going to show you how you can benefit by using your credit card in conjunction with your IB account, right? So how it works, let's get back to the basics. So let's say I want to put $50 to $100 into this account. So at the end of the year, assuming I put $100 in, that's going to be $1,200 at the end of the year. So that just gave me a credit line of the money that I have sitting in that IB account, right? Infinite banking. So of course it sounds like, oh, well, that's not really going to get me there. Over time, that money continues to grow and grow and grow and grow and compound over time. So the goal is to get more in. So let's say I have a household of about, $5,000 a month going out. Hypothetically, $5,000 a month going out. So when we talked about recycling your bill money, assume I'm going to put that money into my insurance policy and I'm paying on my premium. Now, when I need to pay my bills, I'm not actually taking out a loan against the money that I have sitting there like a traditional bank. When you borrow that $5,000 out of that bank, it depletes. So let's say I have $5,000 and I need $3,000. I only have $2,000 left in that bank. When I borrow $5,000 out of that infinite banking account, my $5,000 is still there. I'm not losing any fingers here, okay? My fingers stay. They remain. $5,000 in, I still have $5,000 working for me, earning up to 6% in most cases, right? Now, this has been going on for the last 200 years. So there's no chance of this going anywhere anytime soon. In fact, the market can crash and your money is still going to be in a safe, permanent residence where it has the ability to compound. So I can now borrow, let's say I want to take out $3,000 to recycle my bills. The $5,000 is still there. I have access to $3,000 that I want to pay my bills. And unlike a credit card that I have to pay back at 19%, sometimes 21%, I'm making the insurance and the credit card companies wealthy. But then what happens to me? I'm just, again, two types of people. My money is not at work because I'm at work, working hard for the money, right? When our money's supposed to be at work, working hard for me, working hard for you. So your money is still at work, working hard for you, but you still have access to that money to pay your bills. Now, when you take your income to pay yourself back on that $3,000 loan that you used to pay your bills, you're going to recapture all of that money as well. Now, here's the great thing about infinite banking. Technically, you don't have to pay it back. and you still have $5,000 sitting there earning interest regardless if you pay it back or not. So the benefit of having an insurance policy is that, God forbid, if something was to happen to you, that money will come out on the death end, the death benefit side of that. This is not about a death benefit. This is about living benefits, taking a living policy and living from that policy. Not only do we design our policies to benefit you and your family, but it's also designed to benefit you in the case of a critical illness, a chronic illness, a critical injury. Whenever we experience those types of things that go on in a person's life as we get older, who wants to be struggling to figure out how we're going to still make ends meet when we no longer have the job that we can go to? So these policies are designed at age 65 to be able to access $1.5 million if you need it in a lump sum, or about $30,000 a month guaranteed, so you can still enjoy the lifestyle that you deserve. Now, if that haven't gotten your attention, then wait, there's more. Because with infinite banking, as that money continues to grow, guess what? Your death benefit continues to grow as well. So if I start the policy off, let's say $500,000, and in the next 20 years, now that $500,000 is $1.5 million in liquidity. So I have $1 million in liquidity that I can borrow, and I still have the $500,000 sitting there in as my death benefit. So if I borrowed the whole $1 million and I paid myself, let's say $100,000 extra a year for the next 20 years out of that $1 million, then what is going to happen is that that money is going to be subtracted out of the death benefit, and so my family still benefits from the $500,000. It never depletes your death benefit. So you're not going to lose, you're actually gaining cash value, because what you put in, the insurance company is rewarding you for your money sitting in that insurance policy. So they're, just like the banks, able to loan money out 10 times the amount to other investors such as yourself. And one of the great things about these policies, you are a part owner. As a mutual holder in the insurance, life insurance policy, you become the owner. So not only can you recapture the interest that you would have gave to the to the credit card company, and we're going to talk about mortgages too. So how I can show you how to pay a house off that you have a 30-year mortgage and pay that house off in 5 years. But not only will you recapture the money from the interest, but you also going to receive dividends coming in. So what you put in, your money is now making money. So for example, if I never put, for the next 10 years, if I put money into that policy and I say, you know what, I don't want to pay anymore into this premium, I'm done paying and that's it. Because that money was allowed to sit, I'm still going to make more interest off of it next year, and then the year after, and the year after, and the year after. So if I contributed, let's say $300,000 into my life policy, 10 years from now, I'll have $1 million in liquidity just from the $300,000 that I put into that policy. So there's so many different ways that this infinite banking policy has so many great benefits, and I'm so excited about sharing all these things with you, right? So these are just some of the things that are included in the concept of infinite banking. Getting this information is critical. I mean, it's detrimental to say the least, because this is how lives have been changed. This is why the Rockefellers are who they are. I don't know if you read the book, you know, What Would the Rockefellers Do? But here it is right here. I'm giving it to you. It's all in a simple concept called infinite banking. So the longevity that is attached to this, when these policies are established, the illustration runs out about 120 years. So 120 years from now, while your money is still allowed to sit, can you imagine your kids living off of the interest? They're trust fund babies. So we're establishing a trust fund through an infinite banking account, right? So this is tax-free, does not have to be reported to the IRS. It has benefits attached to it that are continuously growing as we still have access to the money. Where else can you do that? No banking institution. Even if you had a CD and that money was sit to allow to grow, I mean, what are you basically gaining? 2% at tops? So I don't care what housing institution you put your money in. I don't care what 401k. I don't care what college plan you have set aside. Hands down, I call them all parasites because they're sucking away at you while you're putting your money into an institution that's still making them financially free. But are you financially free? Is the struggle real for you? So if the struggle is real, like it was for me, then infinite banking is where we are going to house our money for that permanent residence, right? So there's only two ways that our money is supposed to be, that our money is at work, and that is either you are working hard for money or your money working hard for you. Where do you stand? And if your money is not working hard for you, infinite banking is the structure that we are designing this course on right now. Infinite banking. Why is infinite banking something that you want? Why is infinite banking something that you need? Okay, so this course is designed to take you through the step-by-steps of how it works, what is the concept of infinite banking, and the average person that actually has an IB account. How do I work that infinite banking account? How do I recycle my bill money? What can I do to actually see the life that I know I deserve and still pay my bills on a monthly basis without draining my own tank, without having to keep working for the next month to keep paying my bills? I mean, it's amazing to me now to go to the gas station with gas prices as high as they are now. You need another job just to pay for gas, right? So even though the prices may be going down, and at some point maybe they will, it doesn't matter. The point in this illustration is all about understanding the concept of recycling your bill money, the concept of being able to pay for gas and knowing that your money is still sitting in that permanent residence. And so I want to make sure I emphasize on that. Money still sitting, but I'm paying for gas. Isn't that supposed to subtract from the money that I make? It sounds really confusing because we've never had anything structured in a way that we can have access to it. So what typically happens is when I put money in, I no longer borrow and touch that money ever again. The insurance company gives me what is called an extension arm of a line of credit based off of what I put in. So remember I said if you had $100 and at the end of the year you only got $1,200, well, your bills are probably more than that. Why would you only want a limited credit line of only $1,200 when you still have bills? So now you just took an infinite banking policy and cash accumulated value built up in that policy. So not only are your grandchildren going to benefit, but the children that's going to come after them. So grandma, granddad, great job, because what you're doing now is creating generational wealth for your family. And that's so important that we get started at any means necessary. This is why I'm so passionate about this infinite banking, this concept. Even though I have 30 years experience as a broker, investor, real estate specialist, I'm passionate about this infinite banking. I'm sharing this information with you today because this information has to be exposed. We have to get this knowledge out there and share why IB accounts are so critical. It's critical to life, to our life legacy, to the expansion of businesses, and just having the gap of that 228 year gap being closed, right? And this is how we get there, through infinite banking, recycling our bills, taking our bills and recycling that money and still having a permanent institution for that money to sit in to create generational wealth, right? And so that's so important that we understand how the system works and how we can get that back tax-free, how we get it back tax-free, and how this system is going to benefit you and your family and your legacy on a tax-free, compounding, non-reported to the IRS legal loophole that has been shared and is being shared now, and we're structuring these policies in a way that is going to benefit you. So, you know, when I think about the wealthy and the private reserve and the cash flow model and how they structure and they explain these to, you know, the wealthy, and you being wealthy in spirit, we're all wealthy in spirit. So that you're entitled to hearing the same information. So when you go to the financial advisors and what they tell you to do, think about it. Most financial advisors and stockbrokers typically get paid for showing you where to invest your money, and then it's a high risk. And so that's the basics of what that structure looks like, right? With an IB account, it's structured with you in mind. The insurance agent is benefiting you. The money is going to you. The interest is going to you. When you pay yourself back, the line of credit is going back to you. So all of those different benefits are all about you in mind. And so when you have a person that doesn't have your best interest at heart, then it's always going to benefit them to sell you something that has a risk attached to it. And that's why the rich keep getting richer. When it comes to your IB account, you continue to get richer, right? So that compounding concept is now working for you. It's the eighth wonder of the world. You might as well enjoy it. You might as well find out how the compounding concept works. When you think about the cash flow model, right? And I don't know if you guys watched any of my YouTube videos, but the cash flow model, if I'm holding a tank and money was always intended to go into that tank, but then I have another tank over here, which is investments. Then I have another tank over here, which is my savings. Then I have another tank over here, which is my bills, my mortgage, and my credit cards, right? So think about it like this. If nothing goes into this permanent residence, then that means it has to go somewhere. So it's either going into your savings, it's going into your investments, and it's definitely going to pay some bills, right? So eventually the tank is going to be drained, even with a savings, because you're going to save for large purchases. And then once you cash out that house or cash out that car, you just drain the tank. So now the tank is drained again in your savings. So let's say you're over here in your investment world. So you have your money over here. It's going to take money to make money. So you're always going to be draining that tank, right? So your investment money is always being drained. And certainly your bills is going to always be draining because they rotate every month. You still have to pay the lights. You still have to buy gas. You still have to eat. And if you have a car or house that's paid off, there's still going to be those expenses that are attached to the upkeep and the oil changes and the property taxes and whatever is associated to that tank being drained. But with the cash flow model of infinite banking, imagine all of that money being housed in a permanent residence, and I still have access to utilizing that money for savings, for investments, and for my bills without draining the tank. Yay! I'm excited about that information, right? So I just got excited. I just wanted to pause for the cause. So now we're going to talk about loans. How do we benefit from the loans, right? How do you benefit from a loan when it comes to infinite banking? Did you know you can take out a loan regardless of your credit score, regardless of if you have the right ethnic background, regardless of like who you're related to and who you know and who you don't know, or what banking institution you're a part of, or if you're with a credit union or not with a credit union, and all these other things are associated with borrowing money, right? So typically what happens is, as a mutual holder and a part owner of your own infinite banking account, you have access to your own line of credit. So what you put in is what you get out. So going back to that assumption of that $5,000 that you're going to put in, first year you have access to that money. Second year, let's say you put $5,000 back in, you now have access to the increased amount of that money. The next year you have $5,000 going in, you now have access to that additional increase of that $15,000 that went in. So the $15,000 is still there. 3 years later, your money is compounding. So what typically happens is that you're actually going to have a line of credit of more than what you actually put in. You're not excited? I'm excited. You're going to have access to more money than what you actually put in when it comes to your own line of credit. So taking out that loan, this is not just about, we all have a seat at the table now. This is not about being on the back end of the spectrum. You're going to be a seat at the table. We now have a seat at the table where we can call our own shots. We can dictate how our lifestyle is going to be ran, when we're going to pay bills, and when I want to pay myself back, and if I don't want to pay myself back. But in the concept of loans, because we're always saying, well, how does that work? And how do I pay myself back? And what do you mean I don't pay myself back? Aren't they going to, if I don't pay myself back, then I'm going to lose the money that I put in, or I'm going to deplete the $15,000 that I borrowed against? No, that money is compounding in your permanent residence. The money has a lock around it. It's in a safe housing. It's safe. It can never be touched again. You have access to that line of credit. You can invest, you can save, you can pay your bills, but you have access. Now, why would you want to pay yourself back? Think about it. And I want to pause for that cause. Why would you want to pay yourself back, right? If you're your own bank, what bank? Think about it. If you're a business, how would you stay in business if you're not paying yourself back? If you don't pay your loans back, how do you, the bank, stay in business? If you're giving out loans and nobody pays you back, how would you stay in business? So restructuring and putting yourself on a method of paying yourself back, however you want to pay yourself back, once, twice, 3 times throughout the year. You may want to pay yourself back because guess what? You have a lump sum of money now. You can do more with a lump sum of money. So remember, I talked about the penny concept. I can do more with $5.3 million than I can do with $100,000. So why would I take the $100,000 today when I can wait 30 days to receive $5.3 million, $68,709.12? I can do more with that. And certainly, I can pay myself back. So in paying yourself back, the benefit is to recapture your line of credit back. So if I have $5,000 the first year, and let's say I don't pay it back, then next year I put $5,000 in again, then that's only going to give me access to that $5,000 on the next year. Even though I have $10,000 still compounding, but I only have access to that line of credit because I never paid the first $5,000 back. Are you following me? Write it down. Make the vision plain for you to understand. I got it. I get it. This is for your knowledge, your information, for you to obtain it, for you to be able to absorb this like a sponge. When you wake up, when you go to sleep, when you get a paycheck, every dollar, every dime, every penny that you get goes into that IB account. And within 3 to 5 days, it's right back into your bank account. And now you can do what you want. You can do as you please. So if I'm paying myself back, then guess what I have next year? I have a $10,000 access rather than the $5,000 access, right? So that gives me the power of leverage, the power of leverage. So this is why I want to pay myself back, even though I know I don't have to, right? But get the structure of why you pay yourself back. Understand the why, not only the legacy, but the why am I paying myself back. The legacy is going to continue to grow because the money continues to sit. That's there automatically. The death benefit is there automatically. The policies that is going to pay you if something comes, let's say you become ill or chronic or critical ill, that's going to be there regardless. But the paying yourself back is the structure that you're responsible for. You're going to dictate how much you have as a line of credit when it comes to either stacking that money by using your cash accumulation to either pay yourself back to replenish or to pay the premium back to replenish. So write this down. My income pays my premium and my premium pays my bill. Get it right. My income pays my premium and my premium pays my bills. That's the power of recycling your bill money.